Hello and welcome to another Smaulgld live stream. Tonight is Monday night, October 22nd, 2018. And tonight we're going to be talking about how China rushes to save the Shanghai Gold Exchange. Shanghai Gold Exchange was down at 1.40% this year. And that is new music by Mark Battaglia, who has produced all of the introductions to the Smaulgld live streams, the Smaulgld podcasts, and that is another one in the repertoire. I try to move them around now just to give people a different sense of the music. That's a bit of a more funky groove. Most of the other introductions a little more rock and blues. But tonight, since it's a little later on, we've got the Soul Kitchen jazz thing going on. All right, so let's talk about what happened in the gold and silver market. So let's take a look at our gold price today, our silver price. Then we're going to take a look at the gold silver ratio. Then we're going to look at the Dow gold ratio. And then we're going to check out Silver Eagle premiums, and we're going to check out US Mint silver sales. So let's get started now with the gold price for today. And then we're going to check out the equity markets, the crypto markets. Then we'll get into our topic for this evening. So the gold price opened at 1227, went all the way down to 1220, closed at 1221. It's up a little bit now since the close. It is now at 1223. It's up about $1.40. Not a big deal. So the day down 0.47%. Now, that was in a market where the Dow Jones was down 126 points, down about 0.5%, but the NASDAQ was up 19.6 points, up, what, 0.25%, and the S&P was down 0.43%. So a mixed bag on the stock markets. The big news, however, was that the U.S. dollar was up pretty heftily. It was down at one point to $90 index was at 95.50, and it closed all the way up at 96.02. So strong dollar today drove the gold and silver prices not significantly lower, but they did hold their gains for a bit. So let's take a look at, so you're down 0.47% in gold. Let's take a look now at the silver price. The silver price did about the same. It was down 0.56%, and it opened at 1463, got up to about 1467. It did fall to 1450. Last closed at 1455 at the end of the day, and that's where it sits right now at 1455. What did that do to the gold-silver ratio? Well, it didn't help the gold-silver ratio. The gold-silver ratio rose a bit because gold fell less than silver did, and that's not uncommon. It's also not uncommon for gold to rise and silver not to rise as much. I know a lot of people are convinced that this gold-silver ratio is out of whack. It really isn't. I'm not going to go into that tonight. We've done many YouTubes on it. But I will say that it is high, but there is no such thing as this natural ratio that it's destined to go down to, that the silver pumpers constantly tell you that silver is rarer than gold. They're like the NPCs of gold and silver pumpers. Same with this JP Morgan has 800 million ounces of silver. Another complete nonsense story, just like COMEX default. These are just stories that they put out there designed almost to entrap you into thinking that gold and silver are set to skyrocket. Gold and silver may be good investments. They may one day skyrocket, but not for the reasons that they tell you. Anyway, the gold-silver ratio closed at 84 to 1. And that has been at an elevated level. It has done nothing but really go higher over the last 6 years, from 50 to 1, 60 to 1, 70 to 1, 81. I've seen so many videos. Time to buy silver. The gold-silver ratio is elevated. It's unsustainable, the ratio. Yeah, okay. Well, again, what my view on the gold-silver ratio is, gold is the go-to metal of choice globally for financial crisis. And if there is a financial crisis, or there is a economic crisis, or there's a currency crisis, that's where people go. It's only when gold gets very, very expensive that silver, people start to scratch their head and they say, okay, well, that's the next best thing. But during normal times, still the insurance policy that people buy and central banks buy is gold. And we saw Hungary actually make a statement along those lines, that they purchase gold because it is a safe asset. And of course, anyone or any bank who has any brain understands that the world has created 10 years worth of, quote, unsustainable debt. China leading the way in debt creation. And they know that a Minsky moment may have already passed, where the more debt you issue is not going to help. You can keep issuing debt, and the problem with issuing debt is that the first debt you issue may buy you a dollar for dollar, a dollar's worth of GDP, or maybe more. But as you move on and on and on, and you bring that demand forward, you get lessening returns. But the problem is you still owe the money from the initial debt that you created. And that is why people like to secure their portfolios. Countries like to secure their financial positions to the extent they can with adding gold to their portfolios. All right, so let's take a look now at the what are the charts we have. The Dow gold ratio still elevated, but we do see, if you take a look at that chart, you've got that drop in the Dow Jones, and you have a bit of a rise in the gold price, but you still have a Dow Jones gold ratio 20-to-1. Now, there have been times in history where that ratio has been 1-to-1. And that's when generally they say it's time to sell. Just like if the gold-silver ratio got to 20-to-1 or 16-to-1, many would say that's time to sell. This isn't investment advice. This is just historically. You don't get much better than that. Just like if gold were to go to 20,000, just like when Bitcoin went to 20,000, in retrospect, that's when it was time to sell. Prices may rebound, but you can see that they've dropped from 20,000 Bitcoin. Maybe now's the time to buy, but the time to sell definitely was at 20,000. That's not to say it won't go back there again, but in the meantime, you've nursed your losses from 20,000 to 6,000. Similarly, when gold was at 1,900, the time to sell was then. The time to sell silver was $50 back in 2011. That's all in hindsight. I'm not telling you anything you don't know. It certainly isn't investment advice. It's backwards looking. Okay, but there's your Dow Jones Industrial Average versus the spot gold. One could say it's elevated historically. So we also know that the stock market has had an unprecedented rise. And really, it's been in a bull market since 1987. And what is the final chart we've got for you tonight? And that is the Silver Eagle premiums. Now, Silver Eagle premiums are a bit on the decline. You can see here, these are the premiums that you get from APMEX, but they're pretty much the same across the board. And Silver Eagle premiums, let's just make sure everyone understands that Silver Eagles are sold to what's called authorized purchasers. And authorized purchasers are selected by the U.S. Mint on their basis that they can distribute the coins, and they'll buy enough coins from the U.S. Mint to make it worth the while to use them as a distributor. And most of the authorized purchasers are not bullion direct retail bullion dealer. You know, A-Mark is one. There's a whole bunch of them. But like Silver Doctors is not one. J.M. Bullion is not one. All your major bullion companies that you may deal with are not authorized purchasers. However, APMEX actually is. So APMEX is an authorized purchaser. And then the retail companies that you buy your silver from or your gold from buy from authorized purchasers. Now, the rub on American Silver Eagles is that by the way, I just put up a Silver Doctors or SD Bullion link, and I'll explain why that's there. The rub on American Silver Eagles is that authorized purchasers are charged for Silver Eagles $2 per coin, no matter what the price of silver is. So that means that you have a built-in premium of at least $2. And no authorized purchaser is going to buy Silver Eagles from the U.S. Mint, pay the $2, and then charge you just $2 over spot. I mean, they would be in business for nothing, and they'd actually lose money after they went through their cost structure of buying, transporting, and hiring people to sell them to you for $2. So there's not much advantage in that. So that's not what happens. So the authorized purchasers buy them for $2, and then they have to on-sell them for whatever they sell them to other retail distributors. And those retail distributors, they mark the price up. And that's why when the price is low, American Silver Eagles are generally perhaps not a good bargain, because $2 on a $10 silver price is a 20% premium. $2 on a $20 spot price of silver is a 10% premium. You can see that Silver Eagles become more attractive the more expensive they are, because you've got that built-in $2 premium in terms of a lower premium. So sometimes it makes more sense to get generic silver that you can buy for 49 cents, 59 cents, or closer to spot than you can Silver Eagles. However, the link I gave you does have Silver Doctors having a SD Bullion is having a special. I think it's 2.25 over spot, which is pretty low for American Silver Eagles. I have to say that that is an affiliate link, and if you do buy through that link, Smaulgld gets a small commission, but you would pay you'd pay the same thing. It just takes you to the site as if you visited that site yourself. Okay, but you can see that silver premiums for Silver Eagles are coming down a bit, and the numbers today from the U.S. Mint, we saw a bit of a surge in Silver Eagles sales at the end of August through September. So August they sold over 1 million. September they sold about 2.7 million. And October opened up strong, but the numbers have kind of faded now. They're still at the last I reported is at 1.3 million, and there's only another 8 days left in the month. So maybe sales are fading again at the U.S. Mint as the prices they've ticked higher, but they haven't really ticked much higher. So Silver Eagle premium will probably come down a bit more if we don't see a surge in prices. If you want to get Silver Eagles, you can do so through that link. It's not investment advice. I'm not saying it's a good time to buy or a bad time to buy. You make that decision yourself. Also, in precious metals, interesting news today. Palladium had a big day. Palladium has been the metal to have owned. Again, in retrospect, if you bought palladium 10 years ago, it was $200. It's now $1,100. Palladium is at all-time highs. If you invested 5 years ago in palladium when it was $750, you're well ahead at $1,100. If you invested in February of 2016 and when it was $500, it would be a more than double. So palladium is the big winner. In fact, palladium always traded at a discount to platinum, and platinum always traded more than gold. We've got a very strange situation now where palladium is trading significantly higher than platinum, and platinum is trading at a significant discount to gold. Gold is at $1,220. Platinum is at $820, and palladium is making a run at gold at $1,110. Now, palladium is rare, and the reason they're saying for the rise in palladium is that most of it comes out of Russia, but platinum is also pretty much exclusively found in South Africa, Russia, and the United States. But the United States doesn't have that much of it, and Russia has a good portion of it. And South Africa is always having supply issues just with labor shortages and strikes and so on. So it's surprising that platinum is not made much of a run at all. All right, let's take a look now at what happened. Well, it's basically yesterday now in China. The stock market had been down for so long, and it was only a matter of time till the Chinese decided they were going to directly intervene. They put billions of dollars worth of yuan into the market, boosting it, driving it up, the Shanghai exchange up nearly 4.5%. Now, that didn't have as big of an impact on the U.S. markets as one might have expected. The futures are strong this morning, but there was no follow-through in the equity. So you can see that China is also talking about lowering taxes, more subsidies, creating more credit. So China has basically gone all in on whatever it takes, it seems. The yuan is now closing in on 7-to-1 on the dollar, devaluing the yuan, issuing more credit, issuing more subsidies, lowering taxes, and directly adding money into the stock market. So for anyone who thinks that the Chinese yuan is going to crush the dollar, no way, Jose, wrong goes star. China's in the midst of the biggest credit Ponzi scheme ever. Now, you can criticize the United States for everything it's done, QE, I get it. United States has lots of debts, unfunded liability. China's got them more, and China is reliant on credit far more than any country on earth. Remember, they've created this economic miracle by bringing about 120 years worth of demand forward, and it's all credit based, and they have a population that's not going to put up with not having, you know, they moved hundreds of millions of people from the country into the cities. So they almost feel like they're owed a standard of living that they were promised and that they've been enjoying now for the last 10 years. So it'll be interesting to see what happens there. Other news. Germany will now buy natural gas from the United States. If you recall, a few months back, Trump went on a tour to Europe, supposedly offended our allies by going there and asking them to pay for part of their NATO, and then also criticizing Angela Merkel for buying natural gas from Russia. And the understanding there was, why is the United States paying for NATO? Because what NATO basically does is defend Europe against Russia. And meanwhile, Germany is buying natural gas from Russia, and the United States is defending Germany from Russia. So the deals announced today, it looks like the Germans will be buying natural gas from the United States. It might be a bit more expensive. Obviously, there's no pipeline. The way they transfer liquefied natural gas on these massive tankers, so it's got to be more expensive to transfer it there than possibly through a pipeline that they've built from Russia. However, that ties into my theory about the petrodollar, or the natural gas dollar, or the coal dollar. The U.S. is becoming a major exporter. It's the largest producer of oil right now in the world, and the largest major exporter of natural gas. So this whole concept that somehow countries need dollars in order to buy oil from Saudi Arabia applies more to need dollars to buy energy from the U.S. than Saudi Arabia. And they also need dollars to buy oil from Saudi Arabia. But take it one step further. Even though countries may be selling U.S. treasuries, a lot of them are selling treasuries not because they're dumping the dollar and they've had it with the dollar, is because they have dollar denominated debts and they need to raise dollars. So they sell U.S. treasuries and they get dollars. So they're still using the dollar. They're just not saving in the dollar in treasuries because they can't save anymore because they owe money. So they have to cash in their U.S. treasuries. All right. I think that's it for the opening monologue. We're going to take a look at what we've got in terms of comments and questions and so on. All right, let's see what we got here. Let's go back. Tom Manley, China is singing the blues. Yep. How is China going to shave Shanghai street? I don't know what China's going to do. but you've been probably taught by these gold pumpers that China's got it going on, and China's going to crush the dollar, and China's had it, and China's got the gold back yuan game changer. Bunch of nonsense. China's not going to back the yuan with gold. That'd be the dumbest thing they can do. When you are a credit Ponzi scheme, the last thing you want to do is back your currency and not be able to create more credit because it's backed. Also, they're not going to allow you to exchange. No one in their right mind would hold a yuan if you can get gold, just like no one in their right mind in the 60s held dollars when the United States was obligated to give you gold. Charles de Gaulle from France, Switzerland, Germany all came to the U.S. and said, that's a good deal. Yep, dollars backed by gold, but I'd rather have the gold, so here's your dollars back, U.S. Treasury, hand us the gold. If China were to ever convert the yuan into gold, even just their petrol suppliers, they would be out of their gold quick, fast, and in a hurry. So they're not going to do that. They never were going to do that. That was a complete gold pumper story that never had any backing. China never said that, but of course they said China has just announced they're going to back the yuan with gold. Gold back yuan, game changer, petro yuan. And so it went. Every pumper channel covered that story as if it was true. It was fake. I told you it was fake. It is fake. They're the same people who told you that the United States could never raise interest rates. The Fed could never raise interest rates. The next thing they're going to do is lower interest rates and go negative. Okay, we know how that turned out. Silver set to skyrocket. Gold set to skyrocket. It's like NPCs for gold pumpers. They're conditioned to say the same thing. COMEX default, gold back yuan, sovereign size gold buy in 45 days, China to shock the world, China to crush the dollar, dollar collapse. Same stories repeated over and over again. Really no analysis whatsoever. All right, but let's take a look now at the comments. Good, you didn't get cut out from YouTube. Yeah, all right. Silver is used in hybrid whips. All right, 15-1. Yeah, all these people who make up these stories. I'm not going to go through the whole why the gold-silver ratio. Maybe I will. The gold-silver ratio has been 16-1 for about, I'd say, 14 days in the 20th century. For the most part, ever since American citizens have been allowed to own gold in 1974, and the price of gold was allowed to go above $35 an ounce, where it was fixed by an act of Congress from 1934 to 1974, the gold-silver ratio was only there for a brief shining moment in 1980. Ever since then, where gold has been allowed to float higher, silver has never been close to that since 1980. It's averaged about 55-60-1. But the silver pumpers will constantly tell you that it has to go down. There's a natural ratio. They give you this relative rarity nonsense. Well, relative rarity, if it meant anything, then platinum would be 10 times the price of gold, and it's not. Why? Because gold is more desired than platinum. That's plain and simple. That's the only reason. Well, but platinum's not a monetary metal. Well, kind of was in Russia. And silver's not a monetary metal right now either. You answered your own question by bringing that up, because silver is not held in any way, shape, or form by any country as an asset for monetary purposes. Gold is kept on the books, as we've seen in Hungary and Poland and India and Russia and Kazakhstan in recent days. They're all adding gold to the reserves. They're not adding silver. Silver has been completely demonetized. You may think of it as a monetary metal. It has a monetary history, but that history is gone. It used to be good for making coins. They don't make coins for circulation in silver anymore. Kennedy said that silver serves no monetary... Actually, he said, oh, silver serves no monetary purpose other than for the purpose of making coins. And he moved to get rid of silver as a monetary metal. And a lot of people have these wide-eyed theories that Kennedy was some type of free market gold bug or anti-Fed crusader. That's all nonsense too. He actually worked actively to demonetize silver. He was the first Democrat to break from the silver Democrats who always were touting silver as an inflationary monetary metal. He broke from that and he said the only thing that silver is good for is industry and to make coins. And then Johnson took it one further and said, here, you don't even got to make coins out of that stuff. We can use copper and nickel. And that's what they did. So silver has been removed from the globe, from India to China to France to Canada to Australia in the 60s, mid-60s, late 60s as a monetary metal, and it was not retained in any way, shape, or form by governments. So silver has no monetary basis today. It could be used as money if people wanted to use it, but they don't. And that's the reason the gold-silver ratio is not destined to go back to 16:1, because when it was 16:1, whatever ratio it used to be, it was set politically because of political pressure when they wanted bimetallic standards and they wanted to include the inflationary metal of silver. The moneyed interest, the Republicans always wanted just a gold standard, but the Democrats always argued to add silver. It was inflationary and it could help pay down the farm loans better, anyone who's on credit. So that was a forced ratio. It wasn't a market ratio. But ever since we've had a free... Now, you could say we don't have a free market. You got manipulation. Fine. But both gold and silver are in that free/manipulated market. And also the reason silver gets hammered more than gold, it's easier to manipulate silver because it's a small market. So it doesn't take a lot of money to smash it down. It takes more of gold. And also, there's far more big money players buying large amounts of gold. And then you have the central bank backstop, where they're also, 10-15% of the market. And plus there's jewelry. People buying gold jewelry, they buy far more of it than they buy silver. That's not to say silver is invaluable. I'm talking about a ratio. I'm not talking about that silver is not useful, that there's not a lot of uses for silver, that silver isn't a good medium of exchange. I'm just saying why the ratio is much higher for gold. It's not a denigration of silver. It's a rationalization as to why silver is lower priced and is probably going to continue to be lower priced. Significantly lower priced. It's not going to go to 1-to-1. Silver is rarer than gold. That's another one. Greatest wealth transfer in history. Those are... I'm not going to go on with that. All right. Let's see. 15-to-1 when 2023. Higher prices, lower prices. Interesting. Yes, Venezuela prefers Bitcoin. Well, a lot of these countries that have these financial crises do prefer the cryptocurrencies. And you say, why? That's not real money. It's not tangible. What are they going to do with it? They can transact better with it. They're not going to get robbed carrying around gold or silver. They can get out of the country with it if they have to. So crypto, with the interesting thing about, not crypto in general, but just cryptocurrencies are actually good. If you think about what people wanted to do, if they wanted to flee a country, the best thing to have 100 years ago, 50 years ago was gold. You can like melt it and tie it in your clothing and you can sneak out with it. People would stuff it in their different body parts. Silver's harder because you can't really leave with significant amounts of gold, silver, without anyone catching you. And also it gets, try lugging a monster box through customs or bringing it on a ship or whatever. It's not the same as, having a couple of gold coins or having it weaved into your clothing or to have a necklace or something like that. Whereas Bitcoin, you don't even have to, no one even knows you have it. So that's why people are gravitating towards Bitcoin, Litecoin, cryptocurrencies. And a lot of the people, myself included, I understand that you say, well, who the hell wants it? It's not worth anything. There is a real value in that, and you may not see it, but the same reasons why people who like gold and silver, the reason they like gold and silver deep down is they're concerned about a fiat currency collapse. They're concerned that the money is no good. And that's totally valid. There's too much credit. There's going to be a crisis, and you want to have something tangible. But you also want to have something that you can transact in. And if that's what you're, quote, living for, if you think that's going to happen in the U.S., well, look what's happened. If you think the U.S. is going to become like Venezuela, Turkey, Russia, any of these countries that have had significant currency devaluations, look to what was valuable there. And yes, gold and silver would be valuable there, but also the cryptocurrencies were valuable as well. Venezuela prefers Bitcoin. Are you sure? I hear majority are leaving the country. Pablo Pina will go to 5-1. Anyway, I don't know why anyone would think that. The only reason you think that is because you hear silver pumpers say it. There's no rationale for silver to go to 5-1. I mean, yeah, Zach Smaulgld, why do you spend so many resources on gold and silver if all you ever do is poo-poo it? I don't spend any resources on it. I discuss it. I analyze it. I do not think it's smart to promote gold and silver under false pretenses with fake stories or what I think shows faulty analysis or misguided analysis. I'm not against gold and silver. I'm against these gold and silver pumper stories that people repeat as if they're true. And a lot of them have no basis in fact. And a lot of them are based on cherry-pick fact. So what I do, Zach, is I don't cheerlead gold and silver. I'm all for them. I'm not against them. I don't poo-poo them. If you're paying attention, I poo-poo the stories. And you can't show me any of these stories. COMEX default, JP Morgan's got 800 million ounces of silver, silver set to skyrocket, gold back yuan. All these stories are fake. They're not bait. You cannot back them up. And they're also the basis why a lot of people buy gold and silver. And they're buying based on somebody's speculation. But people repeat this stuff as it's fact. There's plenty of reasons to buy gold and silver. Those aren't the reasons. So, Pablo asked the banks, Zach, let's see. Ratio should be, why should it be 1-1? Not even on relative rarity is it 1-1. And relative rarity, as we've mentioned, isn't even dispositive of price. Okay, so here's the thing a lot of people do. Try building a hybrid car without silver. Try building a hybrid car without copper. You see, just because something is useful doesn't mean that its value is indeterminable or should be far higher. Because copper is very, very useful. I can name you many uses for copper. I could argue that in many instances you couldn't have clean water and water delivered to your home without copper. Therefore, copper is indispensable, and therefore copper should be valued 10 times higher. Copper is used in electronics. You cannot use electronics without copper. Copper conducts electricity very well, almost as well as silver does. Therefore, copper should be higher. All right, we're back. Sorry about that. I was commenting on people saying, try building a hybrid car without silver. Now, that implies that somehow, because silver is useful for something, and useful for a lot of things, that its price is indeterminate, or therefore the price should be far, far higher. Now, you can say that about copper. Copper is very useful. One could argue that copper piping brings water to thousands of people, millions of people, and therefore copper is so useful that it should be worth even more than it is today. Copper is used in electronics. Without copper, you couldn't have electronics. Therefore, copper should be worth more. That's what the silver pumpers do. They point to how useful silver is, but really the way you determine the price of a metal is how much of that silver is required to make electric cars. How much of that silver is required to put into solar panels. How much silver is used in electronics. Now, for example, in 2010, 310 million ounces of silver were used to make electronics. In 2017, only 230 million ounces were used. Why? Because they learned how to thrift the silver. They learned how to use less silver. Electronics are smaller now. They don't require as much in the circuitry and the circuit boards. So the idea that oh, well, solar is going to take off, and therefore they're going to need more silver, and they're going to run out of silver, and then silver is going to set to skyrocket. No. What happens in the solar industry is the same that happens anywhere else, is they learn to make solar panels with less silver. So even though they've made like 3 times more solar panels in the last 10 years, the amount of silver that they've used has only gone up by 30-40%. And if it ever got to the point where they wanted to make more and more solar panels, but the price was rising, then they would either stop making solar panels and forget solar energy and use something else, or they'd figure out how to use less silver, which they are doing. It's called thrifting. They're using nanoparticles. They've learned now how to use aluminum to make solar panels. They use less silver in the paste. So just throwing out uses for silver, you could throw out uses for zinc, copper, aluminum, and then from that you just can't extrapolate. Therefore, the price should be higher. Silver is rarer than gold. These are NPC type of knee-jerk reactions that you hear on pumper channels, but they don't tell you how much silver is required in electric hybrid cars. How much is required in bombs. They just say, oh, they're used everywhere. Silver's everywhere. Without silver, we couldn't lead our life, and therefore silver should be much more expensive. No. How much silver is required? If you don't know the answer to that, you can't say silver should be more expensive, because all you have to do is do exactly the same thing for any other major base or precious metal. Why has palladium gone up? Well, the market says that the amount of palladium that's required for its industrial uses is in short supply. No one is saying that about silver other than the silver pumpers. Because if it was in short supply, then you would have bottlenecks and you would not be able to get silver, and you would have no more solar panels being made, no more electronics being made. You would not have items being made that require silver. Well, that's not happening. So, and it's the same with copper. It's plentiful enough that copper is not that expensive. Now, copper goes up and down just like silver goes up and down, although silver tends to go down. All right, Tesla, you should put your resources in the stock market. No. Tesla is going to make a hybrid 18-wheeler trucks next year. Okay. Not talking to you guys, Pablo, talking to the small guy. Well, you're giving me investment advice. I'm not giving you investment advice. I'm just explaining why I think that the price of silver has not gone higher and why I don't expect it to go higher unless there is either a financial crisis, currency crisis, where gold goes up for a long period of time and goes up a lot, then silver eventually will catch up and then maybe even surpass it, and it will spike and then dive. Or there are some industrial innovations that require and cannot substitute anything else that requires silver, and the amounts are required in such large amounts. But just to say an electronic car, how much? I mean, that's not impacting the silver demand right now. Yeah, JP Morgan has 1 billion ounces of silver. There's no truth to that whatsoever. That's 100% speculation. The only silver that you can even remotely attach to JP Morgan is what's in the JP Morgan COMEX vault, in which they say there's 145 million ounces. We cover it almost every night. 145 million ounces, and we have no idea whether that even belongs directly to JP Morgan or whether that's held on behalf of clients. I don't believe the government fear the people of China. They now have a dictator for life. Mr. Charles, the reason they have a dictator for life is precisely because they fear the people of China. They want to strengthen the government. That's a sign of fear of the people. They want to have somebody in there they can view as a strong man. That he is there. Don't even think of voting him out. Don't even think about rioting, because he will direct things against you. Dominus, Putin has literally said they're dumping the dollar. That's correct, and it makes sense for Putin to dump the dollar. Why would a country like Russia, who's under sanctions from the United States, it gets kicked out of the Swiss, there's no reason for, and has virtually no trade with the U.S., and is at war with the U.S. essentially, why would they hold dollars? And yet they have held dollars, and they still have dollars, but why would they have anything to do with the dollar? That doesn't mean that the world is dumping dollars. See, this whole idea of dumping dollars, dumping treasuries, what is taking its place? No, the Chinese yuan is far less desired than the dollar. The Chinese know that they have to devalue their yuan. Who wants to have a currency where you know that as a matter of government policy, they will devalue it if they have to? 10, 15, 20, whatever they have to do, they will devalue it. They have capital controls. They create more credit than the United States. No country wants to hold the yuan as a reserve asset. So the idea that the dollar is flawed makes, I understand that, and that certain countries like Iran and Russia don't want to use it, well, that makes sense too. In fact, they're booting Iran off the SWIFT system. They're not even letting them use the dollar. But that doesn't mean globally that the dollar is doomed because Putin says he's not going to use the dollar. Putin's already sold all his treasuries. The dollar index went up during that time. Think about that. This year is when Russia, Federation, Central Bank of the Federation of Russia sold down its treasuries from 108 billion down to 14 billion, and the dollar index rose. So what does that tell you? QE was 200 billion a month. Russia never had that many treasuries. Even China, they could sell their 1.1 trillion worth of treasuries. It won't be a big deal. That is the most liquid market in the world. U.S. Treasury market. All right, let's see. Energy Rants LLC. Luis, I understand your points about Kennedy, but can you imagine a post-fiat world, internet crash? Yes, absolutely. Look, I'm not arguing that gold and silver and cryptocurrency are in value in a post-fiat crash. What I argue is that the people that focus on a fiat crash focus on a dollar crash. And somehow a lot of them think that there's going to be a reset and then China is going to have it like a big say in it. I don't think so. My view is this. All the fiat currencies are flawed. In the current iteration of where we are right now, the dollar is by far the strongest. Why? Because it's not doing QE. It's not got rates at zero. It doesn't have rates at interest. It's at negative, like Japan. And it's actually selling down its balance sheet, and the economy is growing, and not because of debt creation. Now, on the flip side, the dollar is in trouble because it has $150, $200 trillion in unfunded liabilities. It has all the issues, but compared to the other countries, they're far worse. European Union, ECB, has done a greater amount of QE than the Fed did. They're at $5 trillion right now. So my issue is that the entire fiat currency system is a problem. And the reason it hasn't collapsed is they're all in it together. It's not like China is going to crush the dollar. No, crushing the dollar would crush China itself. And I know people say, oh no, China, they'll just consume and use that. That's a bunch of nonsense. China runs on dollars. China owes dollars. China is a debt Ponzi scheme. They're in it. They cannot crush the dollar. They have no interest in crushing the dollar, because crushing the dollar would crush their entire economy, just like the whole world would be crushed, because the whole world works off of the dollar. That may not be ideal, but all the countries owe, most of the emerging market countries, including China, owe dollars. Turkey, all of them. Now, Russia's in good shape in that they don't use the dollar, but the ruble's not doing well as an international currency. So, yes, gold and silver are insurance. No two ways about it. Does the China Central Bank have a monetary policy would have in the... What they have is what's called the People's Bank of China. And they do create the monetary policy, and they direct the state-owned banks as to whether they should loan money, how much money they should loan, what the capital requirements should be, and obviously they're all lower, and they keep extending loans. They tell the state-owned banks to loan money to state-owned enterprises, to extend the loans, to convert the loans into equity, to say that they're not underperforming when they are underperforming. So yes, they have a far more interventionist central bank than the Fed in China. China's building silver stockpile for industrial purposes, energy rise. Yeah, but they also export. They actually are net exporters of silver. It's not like gold. Gold doesn't leave the country. And yes, they need, so, and India too needs a lot of silver. India has the world's largest, two of the world's largest, the largest solar power plant, and they have more than just one, and they have one of the world's largest, or the world's largest cell phone manufacturing plants that they they manufacture for Samsung. So they need silver as well. Oh man, you just popped my bubble. My silver's worth nothing. No, silver is valuable. It's a relative analysis of how valuable it is to gold. That's all. Stacking assets. I've also started to watch a number of your videos, Smaulgld. I'm confused why you seem to like gold and cryptos, but always bash silver, make fun of people that think that silver is undervalued. Well, because it's not undervalued. They've been saying it for 7 years. And if you go back 100 years, silver has always been the cheaper metal. Okay, it doesn't mean that I don't think that silver is valuable. It's on a relative basis, it's not as valuable as the silver pumpers have made it out to be. They've convinced people that it's got to go higher relative to gold, that the gold-silver ratio is unsustainable. It's false. It's demonstrably false. Historically, it's false. It's only something that they've been pumping for the last 10 years. Silver historically is a spike and dive metal. It's the devil's metal. It's valuable, but relative to gold, it's not. That doesn't mean I think at these prices, I think it's it could be a, if you look at, and I've gone through this, I've gone through the last 40 years, the last 100 years, the last 150 years. Silver has vastly underperformed gold. There's no, if you look at the Dow gold ratio, you can see there's some correlation where gold kind of competes with the Dow in many years and beats the Dow. Silver has these spikes and dives. Silver's had 2 years in the last 4 years where it dropped 50% almost. Gold never does that, doesn't drop that by that much. And silver has these every 30-year generational spikes, and they last about 3 weeks, and then it goes down. So I don't understand why people have convinced themselves that silver is rarer than gold, and the gold-silver ratio is unsustainable. That's just designed to sell silver, in my opinion, because there's nothing in the recent history or the last 40 years, 50 years, 100 years to suggest that silver, the gold-silver ratio, should be much, much lower. Also, you don't think the dollar will crash when you see gold in 5 years. The reason I don't think the dollar will crash is because the world is based on a fiat currency system, and the dollar's the strongest fiat currency out there. That's all. And all of the central banks have a vested interest in pretending that everything is fine. I understand the whole system. I know how much debt is out there in all the countries, how much unfunded liabilities there are. But I'm not going to call it unsustainable, because this same system, which has allowed in the last 20 years stock companies that go public that make no money, like Tesla, they're propping up the system. They're propping up equity prices, they're propping up bond prices, and they're buying each other's debt and calling it an asset. I get all that. But because they're doing it and because they're in control of it, they have no interest in allowing it to fade. They can write off, you see what China does. They just write off debt, they just extend more credit. Eventually, it is unsustainable. But this is a global conspiracy to pretend that it doesn't exist. And the only ones that get hurt are the ones outside the system. Venezuela, Turkey. They allowed Turkey, the Turkish lira, to fall. There was no intervention whatsoever. Why? Because the United States is against Turkey at the moment. Venezuela, the hell with it. Let it go under. Let the Venezuelan bolivar collapse. But they're not going to allow that to happen with the others. Silver has industrial uses, so its demand is in weight terms, says Bungie Silver. Gold is only monetary, so its demand is in currency terms. So gold can be any price, but silver is limited to supply and demand. That's correct to a certain extent. That is a very good analysis. Then apply that to other industrial metals. most industrial metals, unless they're extremely scarce and or in extreme demand, don't soar, because that would screw up their ability to be a reliable industrial metal. That's why copper doesn't generally spike and rise by 3 or 4 times, because it would screw up a lot of industry. Same with silver. Now, things that are more likely to spike, and we've seen it happen, are like palladium, where they're very, very rare. Lithium, cobalt, things of that nature, where you can only get cobalt out of one African nation. Well, they're making lithium batteries, and they need cobalt or lithium or palladium. Very, very rare metals with a significant industrial demand. Silver has a significant industrial demand, but not that much. I mean, it's like 450, 500 million ounces a year. There is enough silver out there to meet that demand, and the industrial demand over the last 10 years has not really increased at all. So people, they like to speak in generalities about how useful silver is and how many different products it's used in. You have to say or ask how much of it is being used and how much is anticipated to be used. See, Tom is saying the same thing. Try to build any car without petrol-based product. Okay. PVC, yes, there's a good point, Colosine. PVC has taken copper pipes out for the most part. What replaces silver? Just asking. Well, there's graphene. There's aluminum. Depends on what the item is. There are certain things that, for example, gold is indispensable for space electronics. Why? Because it doesn't tarnish and it is virtually indestructible. But how much gold is used for that for that purpose? Copper is better than the PVC pipes, but as you say, they've replaced it because it's cheaper. And that's the same thing with silver. You can conduct electricity in your electronics with copper. You don't have to have silver. You don't have to have gold in your teeth. You can have porcelain. In almost every, and you don't have to have silver coins. I mean, there are certain indispensable elements of every precious metal, but that doesn't mean that they're indispensable. And if, for example, let's say we had a massive silver shortage for whatever reason, well, then solar wouldn't be, they wouldn't make solar panels out of silver, or they just wouldn't even buy. And if silver was so indispensable and aluminum didn't work, which it does, or nanoparticles of silver didn't work, then they just wouldn't do solar. It's not like you have anything that it's indispensable. If it becomes so indispensable, then they just won't do that particular thing. They'll do something else. You can always innovate around certain things, and they have done that. When gold goes up 2%, silver will be going up 6%. I agree with that. Only, this is my theory, only once gold has been going up 2% for a long, long period of time. Recently, gold's gone up 2% and silver will go up 1.6%. We're not at that stage yet. I think if the gold price gets to 1600 over the next year, then you'll start to see silver play a lot of catch up, and that gold silver ratio I would understand would go down. Aren't Clinton gold money alternatives like crypto for moving money across borders? Yes, yes. What they're doing with the digitization of gold and silver, one, it defeats the purpose of holding, so you don't hold it. But it does make them comparable to moving the money across borders or just online. The difference is, though, if a government is against gold money, they could seize the gold because they know where it is. Whereas they can't seize the Bitcoin. It's a blockchain. There's nothing, it's decentralized. They can't seize it. That's the disadvantage. It's almost like if you have nothing, you can't take anything. That's the advantage of Bitcoin, blockchain, Litecoin, and so on. The advantage of gold and silver is they're actually tangible. That becomes a disadvantage if someone wants to take it from you. They have to say, look, we've got this much gold in the vault at Switzerland, this much in London, and so on. And government can seize it or it can be robbed. When gold drops 1%, silver drops 3%, but gold also goes up higher than gold. That is correct. That's generally the nature of gold and silver. Financial crisis is a mathematical certainty. Timing is the question. Well, that's right, but that's known all the time. Anytime you have a financial system that has what any rational person would say is unsustainable debt, that's true. But the reason it's gone on as long as it has, Steve, is that it's unsustainable, but the only reason it's sustainable is because they all agree to sustain it. So they're all in it together, so no one wants to say, oh, this is unsustainable. Now, it might happen. I'm sure it will. But it might not happen this year, next year, 10 years from now. All right, let's see. The Saudis are selling their oil to China. They want real money. Yeah. Buying the dips in gold the last few years is fun. Okay. It's like getting income insurance at a cut rate. See, that's... When you talk like that, Tom, that's not like silly talk or nonsense talk or set to skyrocket talk or pumper talk. That's exactly what gold has been. You're not supposed to get rich off of gold. It's supposed to be a asset with no counterparty liability, a certain amount of rarity, a certain amount of desirability, and it's not going to default. That's all gold is. It's not there to skyrocket. But all right, let's see what else. China drank the Kool-Aid. Pablo Pina, Bitcoin pumpers the same as silver pumpers? Yes. The only difference between Bitcoin pumpers, Litecoin pumpers, silver pumpers, and gold pumpers is the Bitcoin pumpers can point to in their history of actually having achieved ridiculous 1,000, 2,000, 10,000% returns. Now, what they, I mean, you can't mock them as much because they have turned out. I mean, you could say, oh, well, now they're down 70%. Yeah, but they've had 2 or 3 bouts of ridiculous oversized gains. Pumping in general is bad. I mean, once you're in the pumping mode, you start with the idea that the asset that you own is set to skyrocket, and you make up stories, and you get other people to repeat them, and you're all convinced that whatever asset you have is the best thing on the planet, and everyone else is stupid for not owning it, and they don't understand. How many times have you heard a Bitcoiner say, do research, you don't understand. You don't understand the technology, do research, do research. You know, be smart like me and own Bitcoin. And then they feel even smarter when the price goes up. It's the same with people who own gold or silver, whatever it is, real estate. They're not making any more of it. Yep, gotta buy more. All right, the dollar's only strong because the Fed is raising rates. Well, that's a big deal when all the other countries are keeping them at 0 or lowering them and doing QE. Yeah, it's all relative. Cobalt, Congo, yeah, that's the country. #1 producer as of now, says Pablo. Bingo boy. When the stock market start losing 40% of the stock market, they'll have to reverse rates to 0. I think what the Fed is doing is they want to be able to reverse them, but the reason they never went to 0 is in order to retain the dollar as a reserve currency, it has to pay a rate of interest. This is why back in 2015, when all of your friends were saying, the Fed can never raise rates, the Fed's going to go negative, the Fed's going to do QE4, I was saying no, and I can show you the article. I did a YouTube on it just a week or so ago. That in 2015, I said, no, the Fed's going to raise rates. They need to create that demand for the dollar. They need to create that demand for the treasuries by putting treasuries on sale, offering a rate of interest, and that they would raise rates, and that they would continue to raise rates. One and done. That's it. Never going to raise any more. Oh, they only raised them twice. I'm righter than everybody else. So 3 times. Oh, no, they didn't raise them. Then they gave up after they raised them 8 times. But I've always said that the Fed would raise rates and they'd try to get away with as many rate hikes as they could to put some distance between them and the other central banks. And they utterly convinced the ECB to do QE. They convinced, they'd never done it before, they convinced Japan to launch theirs the second the United States stopped theirs. So they wanted to create the impression that the Fed was more prudent than all the other central banks, even though the Fed just did $4.5 trillion worth of QE ending in 2013. They figured, let the other banks do QE. Let the other banks lower rates to 0 and below. Let the People's Bank of China continue to create the more credit than has ever been created in history while we raise interest rates, we stop QE, and we try to sell off some of our balance sheet. That was the key to the whole thing. Then, yes, if they will lower interest rates, but I don't think they'll go negative. What they'd probably do, Bingo Boy, is what Janet Yellen mentioned, was she thought that the Fed should buy stocks like the Swiss National Bank could. That's what they'd love to do. Go to Congress and say, look, the stock market's crashed. Lower interest rates aren't going to help. We need to get those prices up quick. So we need like a Fed call option. We're going to buy stocks. Give us that power, and we'll go out immediately, and we'll do like what the People's Bank of China just did in Shanghai. This is the topic of tonight's discussion. They just start investing liquidity in the market, and the stock market goes much higher. Will you be back tomorrow? What will be the topic? Yeah, I'll be back tomorrow. I always pick the topic later in the day. Sometimes it's dependent on what happens during the day, but I'm not sure. But you know I'm here every night, 7 days a week. Zach Smoker, what does central bank need? 350 notional ounces of gold for every physical ounce to keep the price suppressed. Why does the central bank need 350 notional ounces of gold for every physical ounce to keep this price suppressed? I don't know what you mean. Are you referring to the sometimes ratio of COMEX contracts, which is not 350 right now, but I think that's what you're talking about, in order to trade paper gold in a ratio to physical gold? Well, I don't know why they I don't know if they need it. I think the idea is if you're going to manipulate a commodity on COMEX and you don't need to hold the physical commodity in order to trade it, then you can trade gold or silver you don't have lower and get the desired manipulative effect of a lower price by trading more than exists. And that is in a notional amount. I'm not sure I answered your question because I'm not sure what it was. Bingo Boy, they can't raise the rates much more, otherwise the stock market will crash. Yes, and well, not just the stock market, but the interest rate sensitive portions of the economy. Forget student loans, they're already not going to be paid back. But things like car loans, you can't sell a lot of cars unless you have low interest rates. Housing, very big component of the economy. Credit cards aren't really impacted because they already charge you a usurious rate. But higher interest rates slow the economy. That's a fact. So, and that's what they're designed to do. That's why they think they can get away with them. And they know it. Yep. And I don't think that they're trying. And oftentimes what the Fed does is they raise rates far longer into a cycle when they're actually raising rates into a recession and they don't realize it. Like right now, we could be heading into a recession and they're raising rates as if the economy is booming. And that makes it harder because then what they have to do is they have to do a series of rate cuts very quickly. We've seen that before. All right, everyone. Can you tell me why every country is hoarding a bunch of gold and silver? Well, first of all, that's not true, Bingo Boy. I went through this the other night. Which countries have purchased silver? You got to make the distinction between a central bank buying gold, and the central bank doesn't buy silver, and what the import numbers are for gold and silver. And central banks are not really buying a lot of gold. 68, I think what I showed the other night was 70% of the gold purchased by central banks is bought by Russia. And Russia mines its own gold. So it makes sense. Russia produces about 280, 300 tons of gold a year. And they put about 220, 230 tons of that gold right into the central bank. Makes perfect sense. Kazakhstan is the second biggest. They do the same thing. They've gone from 20 tons a year produced 10 years ago. Now they produce about 70 or 80 tons. And now they're putting about 40 or 50 tons of that gold into reserves. After that, we've only recently had Hungary buy gold, Poland buy gold, and India buy gold. And they hadn't been buying gold for years or even decades. So central banks are not buying gold. That is all I need to know. No, you need to know more than that. The amount of gold that they've bought, are buying, is not significant. A lot of people, oh, central banks, what do they know that I don't know? Maybe nothing. Maybe they know they have a gold mine in their backyard. Maybe they know that their currency is crap and that they better add some gold to their reserves. Also, central banks, doesn't it mean something, do you think? Yes, Rothschild's cover, global currency coming. No, it doesn't mean it. I'm going to have to stop now, but it doesn't, I don't want to go into a whole long diatribe about how people interpret things from, they cherry pick a fact and then they make a mountain out of a molehill. All right. We will see you all tomorrow, and thank you very much for listening. If you enjoyed this, please remember to go get your Smaulgld mug. If you get a Smaulgld mug, then you got it going on. You got a hard asset. Mugs can't go to zero. I left you the link there. You can check out the other Smaulgld products. There's the espresso mug. Good night, Tom. There's the espresso mug and the travel mug you can get from the Smaulgld store. And if you really enjoy Smaulgld every night, you could become a Smaulgld patron. We email back and forth to patrons, and that's very much appreciated. And PayPal you can donate via. This is the part of the show everyone leaves, but that's all right. Some people do stay around, donate. They buy the silver from Silver Doctors or SD Bullion. Does help out the site. Keeps me going every night. All right, Bingo Boy, thank you very much for your everybody for your participation, for your questions, your input, and we'll see you again tomorrow night. Thanks, Brent. Good night.